So this is post FOMC. We had the news release at 2 o'clock. Had a little rundown, taking out that sell side, and we're continuing to trade back up. So what I've done here, I've just written out a few things just for my personal journal. So I've got FOMC tape read in blue, it's my prediction, green's the outcome. So as I watch price and I'm anticipating what I want to see, if I'm correct, and then I'll just label it with like a green little box, and then yeah, see how that goes. Blue is prediction, green is outcome. So on my YouTube, I just posted a video prior to FOMC and what I think is going to happen. So this is obviously live timing, and I mentioned about if it was me running the market, how this is enticing everyone to sell short, and especially on this run here, this is going to trick people into thinking that this low is going to get broken and it's going to keep going lower. And as we can see now, we're getting that run up into the buy side. So we've traded above consequent encouragement of this dealing range here. So I would want to see some aggression over the next sort of 20 minutes or so to clear out these highs, and then I'd look to see if we get a real setup to go short and continue to hunt this monthly fair value gap at 4411. So that's what I'm interested in, and yeah, we'll see how that plays out. So just a quick update, we've traded through consequent encouragement and we're just sort of hanging around that little area now. If we go into like a 1 minute time frame or a 2 minute time frame, we could see it's looking like it might want to trade back down below this low and create like a market structure shift again. So this is kind of putting me in like two minds a little bit, because on one hand I'm sort of thinking to myself, if we get a short setup, then it could work from this consequent encouragement level and leave those highs intact. But if I'm in two minds, then I don't really want to be taking the trade. Obviously there's going to be a lot of people jumping into things, and I'm trying to stay as professional as I possibly can. I have to appreciate risk, and this is a day where things can get very wild. So the fact that we've got 1, 2, 3 highs, this like looks too suspicious to me. So yeah, this level is very suspicious. 1, 2, 3 drives, and it's very clean, so I'd look for it to get swept out. So I'm going to stick with my original outlook on price for now, and then obviously if we do get a market structure shift here and we sell off from this area at consequent encouragement and then continue to make our way down from there, then so be it. I'm not going to try and jump in it. So if I go to the 5 minute, if that does happen, obviously this is my prediction, I want to see these highs get sweet first. Obviously if I don't get that in green, I'll just write, okay, price traded up to consequent encouragement, took out this short term high, and then gave a setup to go short and then continue to drop below sell side liquidity into 4411. And then that's just something I can take in my journal for future experience. So let's go back to that 2 minute. We've got this gap in here. So let's see how we react from this imbalance, whether we pick up some buy orders and then run the highs, or just trade straight through it and treat it as a inversion fair value gap. so I'll update this around 3 p.m. Alright, so just a quick update. I'd like to see price work from this 2-minute fair value gap. I've written it in blue, so that's my prediction. Obviously, if I'm wrong, then I'll write it out in green, saying how we just traded straight through and continued reaching for sell side liquidity. If you just go to the 15-minute chart quickly, we can see how we've spiked into this gap on the 15-minute once, twice, and then we've sort of melted back down. So I do feel like it's possible we can pick up a lot of buy orders in here and start ranging, because retail are going to be thinking, right, this is going to continue to melt down after they've seen this price run up and this little drop back down. It looks pretty bearish. And again, just on those lower time frames, especially on the 3-minute and the 2-minute, I just don't like how these highs are intact. Of course, it doesn't mean the market is going to run for those, but just based on previous experience and what I know about the marketplace, it could be just creating the illusion that it's going to continue to sell down and then have a sudden run up, take the high, and then drop. So yeah, I'm just watching it, and I'm not getting involved in anything yet until we take out those highs up there. Alright, so last update, it looks like we are gonna seek that 4411 level now. We did react from that 15-minute fair value gap and we left those highs intact. We didn't respect the 2-minute fair value gap. We traded through it and treated it as an inversion. So I've not really seen what I wanted to see, therefore I haven't really taken anything. There is a setup in here, but again, I wanted to see those highs taken out, so we didn't get that, and I would expect it now to draw down into that monthly fair value gap. So I'm going to round that off there. But yeah, that's the tape reading session for FOMC, and that's why I didn't really jump in, because on these days things like this will happen where you're expecting something and it doesn't really pan out in the way that you want it to, and it just increases risk. So yeah, things always repeat and the next trade's always around the corner.